Good morning and welcome to this investor webinar with Leeuwin Metals Executive Chairman Chris Piggott. I'm Paul Armstrong from Reed Corporate. Brownfields exploration has been a big winner for investors in the gold space in recent times. This week, Leeuwin joined the fray with a maiden 342,000 ounce resource at its Marda project in WA. It's also very clear that there's plenty of scope for growth in this resource. Chris will take us through in the presentation why he believes there's a lot more to come here, how he sees the upside and what he's doing with the drill rig to unlock that potential. Chris will take us through the presentation and he's more than happy to take questions. So if you have any questions, please feel free to tap on the Q&A tab, send them through and we'll put them to Chris at the end of his presentation. Chris, over to you.
Good morning all and thanks for joining us today. So today's about just providing an update to shareholders on our latest release that we put out yesterday, our maiden resource of 342,000 ounces at the Marda Gold Project. And that's a significant milestone for the company. And I think in light of our current valuation, around 20 million market cap and about 6 in the bank, it's compelling value still with a lot of exploration upside to come. The Marda Gold Project. So we put out 340,000 ounce resource yesterday, just 9 months after completing the acquisition. The project's north of Southern Cross. There's history of mining there from Ramelius back in 2019 to 2023, where they mined 140,000 ounces. And I think when you look at that, we've been able to now show that this project now has over cumulatively kind of almost 500,000 ounces. And we expect there to be significant exploration upside into 2026. We'll be aggressively drilling out there with the drill rig scheduled to rock up to site in January. We also have some non-core assets as far as the West Pilbara Iron Ore Project and some projects in Manitoba, mainly our Spodumene Island prospect there and the nickel project over there. When we look at a corporate overview, so our share price is around 16 cents at the moment, really tightly held. Board and management are highly aligned to our share price appreciation. Our market cap's around 20 with our EV around 14. We recently completed a capital raise where we raised about $6 million. So extremely, comfortable in far as our funding to go and do the work we need to do over the next 12 months. Board and management, top 20 there. Myself, Nick Catras, Simon and Scott, people that are very motivated to execute and deliver significant shareholder returns through Marda. This gives you a snapshot of where the project sits. So the Marda Gold Project sits here in the Yilgarn. It's about an hour and a half north of Southern Cross. We've got our resource there now, and some of the drill results we've been able to put out this year include 9 at 5, 11 at 3 from Evanston, showing that we've been able to add significant value with the drill bit. We've only done 10,000 meters of drilling out there this year, and I think when you look at what we've been able to achieve in the last 9-12 months, this time last year we hadn't even announced we'd bought Marda. We'd acquired Marda. We announced that at the end of December. That completed in March. We had drilling going on the next day. We've done 10,000 meters of drilling, and now we've put out almost 350,000 ounce resource against the backdrop of a gold price rising from around 4,300 to about 6,300. So our timing's been very fortunate. We've been able to execute work programs on the ground, and now this resource kind of solidifies some value then, demonstrates the exploration potential as well. We're really excited to put this to market, but also what we can do next year. A snapshot of the project and highlights. So it's 100% owned mining leases in Western Australia. We have about 500 square k's of tenure there. Our shallow maiden resource, 10 million tonnes at over 1 gram per tonne for just shy of 350,000 ounces across a few prospects. Rapid resource definition potential ongoing. So we've got 10,000 meters planned for next year. We're well funded to do that. We're using downhole EM geophysics to vector in on our targets, and we're focused on growing those resources. And our approach to date has been focus on the known opportunities within the mining leases and build beyond them. And now that we've done that, at least phase 1, we can now look into 2026 and continue that process, but look at other opportunities. And what we like as well about the project is any ounces we find out here have high chance for commercialization. We're near where, like Evanston, for example, is literally on a gazetted road. Marda Central, Gazetta Roads cut through. There's multiple mills in the region on mining leases that have a history of production. So in that sense, it's very kind of fast-tracked with any discovery we make, and these ounces have real value in the market. Snapshot of where we sit. So Southern Cross down here, you can see a handful of mills and processing opportunities here, as well as some significant exploration projects going on. Our view has always been that the Southern Cross Belt is under consolidated and a bit underdone for various reasons, and we still have that belief. And I think a few other people in the market are starting to recognise that as well. And when we look at it, it's almost 350,000 ounces in the goldfields of Western Australia on mining leases. It's shallow, there's zones of good grade, and it's within multiple areas of mills. And ultimately, these projects like this always have value. So when we look at the project overall, it's 500 square k's of tenure. The main prospects that we've focused on to date are Marda North and Marda Central. At Evanston, that's in Marda North, there's almost 100,000 tonnes at 1.5 grams with a higher grade cutoff there, within a broader 130,000 ounces there. Some of the significant results we put out this year included the 9 at 5 and 7 at 3. And I think what that shows is that there's significant opportunity for high grade potential there and high grade shoots that just haven't really been explored. And we've been able to recognise that through our drilling, but also our downhole EM and geophysics, where we have multiple EM plates that we haven't tested. And that's what we're going to be drilling in January 2026. So once we get back from Christmas, we'll be straight out there in kind of the first or second week of January, commencing our 10,000 metre drill program. Marda Central, that was kind of the initial area we drilled. We've grown the resource to 87,000 ounces there. Below the pits, the geology is well understood, and I think importantly, we've been able to add significant ounces as far as what was mined there. For example, Python, they mined around 60,000 ounces there. And when you look at our resource numbers at varying cutoff grades, we've added 60,000 ounces to that. So we've been able to replenish what was mined. And I think that bodes well for future exploration. It still remains open at depth. And I think there's significant exploration potential, not only on those brownfield opportunities near the mines and under the pits, but we also have 11 new high-grade trends on historic workings that we've been able to map and identify through rock chipping that really have been poorly drilled. And that's something we're really excited to focus on in 2026. So, known kind of prospect areas with exploration growth below pits, but also some opportunity for more greenfields, earlier stage opportunities to go out and drill and make discoveries. When we look at Marda North and the Evanston prospect in detail, you can see what our drill holes have done to date and the downhole EM anomaly. So all our resources were applied to $6,500 pit optimization shape. And I think what that means is that these ounces have, realistic value. There's a strong prospect for economic extraction as far as the RPGO goes. So I think we wanted to find ounces that had value and the ounces that could be commercialized. And I think when you look at the work we've done to date, we've defined some high-grade zones at Evanston, shown that it continues at depth. And with the downhole EM, we're still showing that that is true. And we're only just getting started up there. I mean, most of the resource here sits within the top kind of 50 to 60 metres. Evanston was last drilled about 20 years ago and was last mined about 99 to 2000. So it's a classic goldfields project that hasn't seen the love, and now it gets the attention that it deserves. And the drill meters that we've put into the ground have added significant value. And when we acquired the project, we thought there was around that 50,000 ounce mark. Our resources almost tripled that. So hopefully we continue that growth trajectory up there and go out there and next year and drill some high grade zones within those downhole EM plates. And importantly, the downhole EM helps us vector in where the targets are, but it also provides a quick and cost effective way to scale the prospect and the strike of that project. So all our drilling, we're doing kind of 50, 100 meter step outs. We'll be doing downhole EM on those holes. And hopefully we see more targets. And all this drilling is going to be focused outside of what the current resource is as well. So, we're growing scale. We know that there's a significant amount of ounces there already, and we see a pathway to grow that with some exploration success. This is what it looks like on plan. You can see our drilling has delivered that high grade zone here, and it's still open. essentially a lot of the resources constrained by those pit optimization shapes. We know there's mineralization out here that we haven't been able to bring into the resource. So we'll look to bring all this area up to that resource category. And we'll also go out and test this trend out here. And this is where kind of the downhole EM anomalies sit. This strike extends about 1.6 Ks. The structure looks alive. You can see on here our heat map showing where the high grade shoots are and the downhole EM anomalies, and some historic workings in the old pit. And I think when you see it in person and in photos, it kind of has a bit more weight to it. You know, we can see in the pit wall here, there's these red kind of iron rich zones. It's a BIF unit. We've taken rock chips in the pit that go anywhere from kind of 2 to 20 grams. So we have a good understanding of what the geology is. We have a good understanding of what it looks like in the drilling now. Now we're leveraging the downhole EM and we're bringing that all together. We've put out the resource and we see a pathway to grow that with some more drilling next year. Marda Central, so this is 4 historic pits. We've put the resource around them. You know, the total resource says 87,000 ounces, 1.26 grams per tonne. It's a great start. We've been able to replenish a lot of those ounces that were mined. Our drilling to date, you know, we delivered drill holes around 16 at 2, 22 at 1 and 0.25. You know, these are significant drill hits below the pit that weren't in resources when we purchased the project. So it's been an execution of that strategy. And then beyond that, you can see these 11 high grade trends. So not only do we have a base of resources that we're building and we continue to grow that, but we also have opportunity for new high grade trends. And you'll see a lot of these high grade trends within the mining lease. So it means that any kind of discovery there as well can hopefully be sped up that process to commercialization. And we're really excited to get out there next year and go and drill these high priority, high impact target areas. Marda South, this is another example of what we have there. So this is the Golden Ore prospect just to the south of Marda Central. There's 25,000 ounces there at 1.56 grams per tonne. Again, on a mining lease below a pit. The geology is well understood. All the deposits here are BIF hosted, and we understand that. And where these structures intersect is where you're getting higher grade zones. We're typically seeing kind of anywhere from 1 to kind of 5, 10 gram per tonne zones in the drilling. And I think that definitely can be an attractive underground target opportunity as well. The geology here is relatively straightforward. It's these kind of east-west BIF structures. They look pretty straightforward, and you know, even at the base of the pit, you can see them. And you know, looking at that, you can tell that some of these zones were kind of the pit ended in kind of 4, 5, 8 gram per tonne BIF samples down there. So we're going to be, you know, a bit more focused on this area into next year and building the ounces out here as well. And I think the takeaway from this is we've just run through kind of 3 high priority target areas at Marda. We know there's a bunch of other projects and prospect areas that we're going to work up next year. We definitely see that this maiden resource is just the first step into building more resources in time and really, you know, delivering value with the drill bit. Summary of where the resource snapshot is for JORC. I mean, you know, I would kind of, you know, any questions, feel free to reach out. Always happy to run through this. And I think, you know, going into next year, hopefully we can have significant growth on this. But yeah, please refer to the JORC, the release we put out yesterday for further detail as far as JORC goes. Marda and pictures, you get a sense of what we've been doing out there. These are some of the old timer workings outside of the pit. You know, these are very significant workings. You know, for example, some of the stuff we've been out there, we're stumbling across these big old open stopes that really haven't had any exploration in a long time, as well as being drawn into the main pit area. So it's, you know, we're kind of spoiled in that regard. And I think, you know, that's a reflection of where we've been able to grow resources in such a fast time is the prospectivity up there. And then Marda Central, you can see some of the old pits. This is the old Python pit. These are some of the old workings. This is a pretty serious old timer working from the 1930s. There's barely any drilling beneath this. And there's lots of examples in WA, especially at the moment, where companies are going out there, drilling along strike, down dipper workings and making new discoveries. And this is what Marda Central looks like from the sky and drone photo. So yeah, why invest in Leeuwin Metals? Even today, you know, like we have essentially, we've been, you know, last week we were 16 cents and today we're 16 cents. Last week we didn't have a resource. This week we do. So I think when you look at it, we're well funded. We've got a low EV. We've got a really strong resource that we put out, our maiden resource. We're well funded to do aggressive exploration in 2026 on mining leases in Western Australia. And I think, in light of the world and the way it is and the interest rate environment, there's a lot of kind of tailwinds for a strong gold price going forward. And I think when you look back about what Leeuwin's been able to execute and deliver on, we like to, deliver on what we say. And I think when you look at the last kind of 9 months, we were drilling the week after completing the acquisition. We've completed a bunch of on-ground exploration. We've drilled over 10,000 meters. We've done a lot of downhole EM and geophysics. We're going to continue that approach to be aggressive with the drill bit. We've got 10,000 meters planned to commence in January. We expect to be growing resources next year and progressing the project down the path of commercialisation. And I think all in all, it's a really exciting time to be a shareholder. And when I look at what the share price is today and the value proposition, we're extremely compelling value going forward. Thank you.
Thanks very much, Chris. Great to see a short and sharp presentation. You just touched on the subject of our first question. The viewer says, congratulations on a great first year. What does the January drilling program entail?
Yeah, so we're currently, we've cleared the pads. And I think when you look at it, the drill holes are all out here. So a lot of the drilling will try to focus on this high grade shoot. We think there's this kind of north-south-ish shoot developing here. And that's where we're going to be targeting the first drilling and then, following up some of these downhole EM plates. So it's kind of twofold. We want to grow the mineralization footprint, extend the shoots, but we're also going to be doing kind of 100-meter step outs out here. And the purpose of that is, one, to test the structure, but also build a platform for downhole EM and geophysics. And hopefully that can then, expedite that process of identifying new targets and expediting that process of defining scale out there. And hopefully you can double or triple the strike and the depth extent of this. I think when I look at it as well, a lot of our drilling is kind of 100, 150 meters below surface. That's kind of the max. Well, a lot of our drill holes end at about 100 and 150 meters. So you're talking the top kind of 100 meters vertical of surface. I think when you look at a lot of gold deposits in Western Australia, they often go very deep. We are literally at the surface, right? This is extremely shallow. The geometry is relatively flat. So we can add a lot of kind of strike down dip extents by drilling a lot of shallow drilling. And I think that's going to be very attractive. And if we can, grow this to a few 100,000 ounces next to a road on a mining lease, it's going to have significant value to Leeuwin.
Right. Now, another question, Chris, what percentage of the ore resources are mineable by deepening the existing open pits?
Yeah, so that's kind of the point of the pit optimization. And so we've, part of what we went through this process was the resource geo said you have to kind of constrain these and have, reasonable prospect of economic extraction. So, these aren't reserves or anything the like in that regard, but I think we wanted to have resources that had a fair chance of becoming economic. And I think when you look at our global resource, I'd say a fair proportion of that is pretty attractive. And when you go to the resource tables as well, you can go through it yourself and make up your own mind. But we've provided a bit of information as far as the sensitivity to different cutoff grades, and hence why we've highlighted the higher cutoff grade at Evanston, where we've got about 100,000 ounces at 1.5 grams at I think it was at a 0.5 cutoff, a 0.8 cutoff, sorry, and that sits within the $6,500 pit shells. So I think, it's kind of we're all a bit spoilt at the moment in the gold space, and it's a bit of a dynamic changing environment as far as cutoff grades and economics, because the gold price has performed, extremely well. But I think all in all, the resources we put out to date, I feel pretty comfortable that these are strong ounces.
Right. Another question, Chris, what operating plants are within trucking distance of Marda?
Yeah, so when you look at this map, that provides a bit of information. So you've got Edna May. That was what Ramelius sent through their dirt from the Marda project when they were in operation there. That's on care and maintenance. You've got Marvel Lock. You've got a couple of mills down here. You've got Paddington here and Davy Hurst Mill out here, as well as Mount Ida. I think there's a lot of optionality in this part of the world. And when we were looking for projects last year, it was a really simple proposition. It was, gold, Western Australia, mining leases, near infrastructure, and pathway to resources. And with the acquisition of Marda, we felt that ticked all the boxes. It's a really simple metric to look at projects and investment opportunities, but it's extremely competitive at the moment to find these opportunities. And we've taken Marda from what was essentially, some old project from Ramelius that was not really a core focus for them. And we've been able to put some kind of real focus and attention as far as from a junior that can do that and do some drilling. We've been able to grow the resource base. And you look at this map and it kind of paints the picture. There's roads that go north-south. You've got Southern Cross here. I mean, it's 3 hours, 4 hours east of Perth. It's a couple of hours west of Kalgoorlie. It's easy to get to. There's good gazetted roads that go east-west and north-south on mining leases. It's, that's kind of what we like about this project as well, is any ounces we did find, we know that it's going to have value because of those factors.
Right. And another question, Chris, going back to the drilling, do you believe you have low-hanging fruit that's worth pursuing around the projects? I assume this means around the resources. And do you have new targets further away that could be a game changer?
Yeah, we definitely do. To date, we've focused on the kind of obvious low-hanging fruit, and that's gold mineralisation on mining leases that we can go up and deliver significant drill hits that grow resources. I think now that we've got, the position of, $6 million in the bank, that gives us a bit more options around developing that pipeline of targets. And that is something we're currently working on. So, to date, we've focused on the pretty obvious stuff. And I think that's kind of, resulted in this resource. Now we're in a position where we're building resources. We've got momentum. We've been able to kind of pivot the company. Just only 12 months ago, we were kind of 4 or 5 cents. And it's we're in a different position than what we are now. And we've got the capital to go and do that work that we think we can build the pipeline of opportunity, and then also progress the resources that we already have. So, yeah, it's a really kind of good project in that sense. We've got, brownfields opportunities that we can go out and drill and add resources on mining leases. But it is Western Australia, it is the Yilgarn, it is a greenstone belt. So there is opportunities for new discoveries or growing existing prospects, and the 11 high-grade trends at Marda Central, that's pretty obvious now, but that demonstrates the exploration opportunity there in a more greenfield sense.
Another question, going back to the treating scenario, was there an arrangement to treat at Ramelius's Edna May?
Yeah, they've got, we've got a ore matching agreement there. So anything we do in that sense, we have to have a discussion with Ramelius. And I think that's, positive for us. I think it's a net positive for everyone. But it doesn't exclude us from, talking to other parties. But, there has to be a discussion at that point. And it's all very fair and reasonable and based on, acceptable market rates. So we have a lot of optionality when it comes to that. And, at the moment, Edna May's on care and maintenance. So, we'll cross that bridge when we get to it.
Right. And going back to, we're bouncing around here a bit here, Chris, back to the exploration. Does the geophysics work at Marda?
Yeah, it definitely does. I mean, we've drilled 1 or 2 plates and there's gold in them. So, yeah, it works. You can see on this section, that's a good point, right? Because there's a lot of false positives when it comes to geophysics. For us, we got the EM anomaly. It matched up where our drilling kind of was in line with it down dip. Everything kind of makes sense as far as matching what we see in the drilling, what we see in the geology, and then applying that to the geophysics. So, all in all, we're pretty comfortable with it. It's, the style of mineralization here is, BIF hosted gold with quartz and sulfides. So the quartz and, the sulfides are what is providing the downhole EM response. And it seems to be pretty straightforward, and we're very fortunate we can use that really cost-effective tool to, grow the target area.
I think we've got one more question here, Chris. Have you got your hands full at Marda, or are you open to other project acquisitions?
Yeah, I mean, we think that, we're focused on Marda. That is, our main focus. But we're in a really interesting part of the world. So we're always happy to have discussions with people, but our focus is definitely Marda at the moment.
Right. I think that concludes all the questions that have come through, Chris. So thanks very much for the presentation. Obviously, you're meeting one of the key requirements of any junior company to generate news flow. It sounds like you're going to hit the ground running in January. So I hope you get a quick break over the Christmas season and straight back into it. That concludes the webinar. Thanks everyone for joining us today. And a recording of this webinar will be available in the next couple of hours too. Have a great day.
Thank you.